Outlook Business, members of the press, ladies and gentlemen. It is really a great pleasure for me to be here at the Outlook Business Leading Edge 2018. We've been here a couple of years before, and I can tell each one of you to expect a lot, because the quality of interactions and the quality of candid conversations that each of the entrepreneurs do on this forum is really something to be watched, believed, and learned from. Now, this session is all about entrepreneurship. Challenges, dilemmas, crossroads, pressures, direction, and how we deal with all of them. Everything in our lives depends on the context, and therefore, for today's discussion, I have tried to put together for you 5 significant trends that we are beginning to see and which will affect entrepreneurship in a significant way in the times to come. The first trend that came to me by observing around is this. When we look at entrepreneurs, usually in India, until say 15 or 20 years ago, we could of course think of the Tatas, we could think of the Birlas, we could think of the Ambanis, we could think of maybe the Agarwals, we could think of some of these names who probably been in India for maybe 20, 30, 50 years. And usually they were the entrepreneurs. They've all done an amazing job for India, and but for them there wouldn't be so much of a private sector, and but for them there wouldn't be so many jobs. But they were the only ones on the red carpet. Of late, we are beginning to see a new trend. And what is this new trend? You could always find a large number of people, not just the science of their large families. You could see people who have talent, who have energy, who have motivation, who have drive, who have risk-taking ability, who have entrepreneurial skills. They have everything, but they did not have capital. What's happened in the last 15 to 20 years is that capital has suddenly become available to a new set of people so that new entrepreneurs can get created, because otherwise you would only have these families who've probably been there for 30, 40 years. And therefore, when you think of people like Sachin Bansal, Vinny Bansal of Flipkart, Ritesh of Oyo, Bhavish of Ola, Vijay Shekhar of Paytm, you think of each one of these names and you think, man, someone gave them the equity to become what they became. And that is a very big trend. And therefore, when we see the FDI figures going up in India over the last 6 years, it is not just another statistic for us to see, revel, and be happy about. There's an underlying meaning from the FDI, because FDI is making it happen. The FDI numbers in 2009-10 was $25 billion, 10-11 is $35 billion, 11-12 is $46 billion, then 13-14, you know, India was rather stuck in a paralysis mode, and that came down to $36 billion. 14-15 is $45 billion, 15-16 is $55 billion, and 16-17 is $60 billion. Next year's projected number is $75 billion. So what a huge jump from $25 billion to maybe $60 billion today. And I can just say that each one of this FDI has the potential to, and possibly also creating new entrepreneurs who will develop the next round of ecosystem for the country. Therefore, in my opinion, entrepreneurship, there is a democratization of entrepreneurship that is happening. The second trend we get to see. Usually, there are a large number of successful entrepreneurs, to their founding teams or successful management, usually have a norm to say, take what salary you want, but don't ask for stake in the company, because ownership is not shared. With the arrival of the new entrepreneurship families, the name I talked about, and maybe hundreds outside of them, options and stock options are being distributed to level 1, 2, 3, 4 levels of management. And the moment someone has got options, stake in the company, they are also entrepreneurs in the system. There are a number of people sitting from our organization here, and I can say from other organizations as well, and I can say each one of them are entrepreneurs in the organization, and because what they're doing is affecting the success of the organization, and the rewards of the organization is going back to them. So that is, in a way, we can say inclusiveness of entrepreneurship and not just democratization of entrepreneurship. There's a second big trend we're beginning to see which didn't exist a while ago. What is the third trend we get to see? The third trend is, when we think of India, electricity from India, China, globe, just take any number, you always find that India is underpenetrated. Banking, financial services, number of ATMs, POS machines, everything is underpenetrated. But of late, what is happening is that along with underpenetration, which is by itself no reason that things will get fixed, along with underpenetration, there is also affordability that is going on because of the emergence of the new middle class, and you know the buying power of the new middle class. Along with affordability, there is also aspiration. People want to buy the next television, next fridge, the next iPod, and the next iPhone, and the next mobile phone that's coming for 60,000 rupees. So there is demand getting created out of this new ecosystem, so to say. The fourth trend that we get to see is that India now has an ecosystem for entrepreneurship. When we say ecosystem for entrepreneurship, what we really mean is that business is not a bad word. We've seen this before. For a long time, maybe years and decades, politicians were scared to use the word business because business was a bad thing. But now we're openly seeing the word ease of doing business, and nobody seems to mind that. In fact, people seem to be supporting it, and it's a national campaign now. When is the last time you saw a campaign that says ease of doing business is going to be a campaign? I don't think I've never seen this, certainly in my lifetime. So there's an ecosystem getting developed, and on top of it, we know that divestments are happening. Divestment is not a bad word. Privatization of banks is kind of seen a little iffy, but certainly divestment is not seen bad word, and divestment is also government letting go of businesses. Formalization of businesses happening. You can see that free markets are definitely one of the most accepted things. So all of these things are part of creating of an entrepreneurial ecosystem, and it's not uncommon for many of these forums to have, felicitating successful business leaders, politicians joining in the game and giving speeches encouraging entrepreneurship. This is not something that we saw for a long time, certainly not in the 70s, 80s, 90s, and not even in the 2000s. It's a new trend that is taking this in 2010s and onwards. First thing that we're beginning to see is the extent of investments in new age technologies. I can share with you that investment in fintechs, as an example, has grown from $25 million in 2013 to $364 million in 2015 to $1 billion last year, and is expected to be $2.4 billion in 2020. Can you imagine the scale of movement from $25 million to $2.4 billion over the period of 2013-2030? Now, this is a new trend. I saw some numbers in blockchain, and I want to share these with you. In blockchain, this investment in startup blockchain all over the world, but it's a trend of the signal that you can get to see in India over a period of time. In 2011, the investment was $16 billion. In 2012, the investment was $72 million. In 2013, it was $163 million. In 2014, it was $487 million. In 2015, it was $750 million. 2016, it was $1.3 billion. And 2017 is $1.6 billion. What's the point, therefore? The kind of investments we're beginning to see in the new technologies, whether they're blockchain or fintech, that is a new significant big trend. In my opinion, therefore, these 5 trends that are starting from the macro of the overall economy and leading up to the investments in these new technologies, and which is eventually, of course, translating to its impact on digitization of globally as well as in India, has a huge bearing on entrepreneurship in the country. Now, this is India economy. We can go a little up and down, and stock markets can go up and down, but that's part of the game. It's a long-term trend that we are all feeling very happy and bullish about. All in all, therefore, we feel that the story of Indian entrepreneurship is just about coming alive over the last few years. And therefore, when Outlook Business puts together stories of success of Indian entrepreneurs, it is absolutely timely. In fact, in today's discussion, I'm told that we got Sanjay Subhash Chandraji, there is Ajay Piramal, there is Harsh Mariwala, there is Kishore Gyani, all outstanding entrepreneurs of this generation. Let me say, outstanding new entrepreneurs of the generation who did not exist, or families did not exist in business even a generation ago. And this particular edition that is talking about, apart from the names I talked about, includes Sanjay Lalbhai, Deep Kalra, Pramod Paseen, Kiran Majumdar Shaw. So these are all amazing stories of our generation. I'm really looking forward to hearing these discussions in the course of the day. And I'm here looking forward to learning insights from all of them. On that note, I wish that every one of you a very riveted evening for the rest of the session. And I hope each one of you enjoy the session as much as I'm hoping to. Thank you very much, ladies and gentlemen.
Thank you so much, Mr. Vaidyanathan, for elaborating on the theme for today. Well, ladies and gentlemen, we are all aware that the current government's tenure comes to a close early next year. So to understand the context in which the 2019 general elections will be held and what would it really mean for the economy, I would like to invite on stage our lead panelists today. Once again, please put your hands together as I welcome Founder and Executive Chairman of Capital First, Mr. Vaidyanathan, Mr. Neelkant Mishra, Managing Director and India Equity Strategist, Credit Suisse, I apologize. Mr. Vinayak Bahuguna, Managing Director of ARCEL, one of the biggest asset reconstruction companies in the country. And of course, moderating this session will be Outlook Business Executive Editor, Mr. V.K. Shande. Thank you, sirs, for joining us, and with that, over to you.
Good afternoon, everybody. Thanks for taking time out from your busy schedules to attend the second edition of Outlook Business Leading Edge. And it's my pleasure to kick off the first session of the day, growth in an election year. We have very good panelists out there, and we hope we'll dish out something which will be as good as the desserts after a sumptuous lunch. So, to put the context, I think for the first time in several decades, we are looking at a government from whom the expectation levels are probably the highest. I mean, we have seen 4 years of the Modi government, we have seen a slew of reforms that has happened. But slowly the narrative is changing on the ground because GDP growth is plateauing, there is inflationary pressures that is coming both from the crude and the MSP side. And clearly job creation is not happening at the pace that it was promised. And we are heading into a year, this year we are going to see 8 state elections, of which 3 are going to be in BJP held states, and then we enter the next year, which will be a general election. So let me start off by asking Neelkant, you have been covering the markets for close to 15 years. Never before we have seen so much anticipation around state elections and general elections. So what is your reading? What is your understanding of how this government has done? And you keep interacting with foreign investors maybe on a daily basis. So what is the sense that?
I think there have been quite a few very structural reforms that have been undertaken. So, at the risk of sounding repetitive, things like GST, the insolvency and bankruptcy code, even things like RERA. I think if we had asked someone 3-4 years back, what is very likely to happen in the space of say 1 year, and people would have dismissed that. But these changes have happened. The economy got disrupted while these changes were being implemented. By and large, I think it has stabilized. So many indicators are showing that the economy is starting to revive. But I see a few risks going forward. First is that the recovery right now is very lopsided. So while the indicators at the upper end of the consumption spectrum are very strong, so airline traffic growth and durable sales, car sales, they're doing very well. At the bottom end, things are still not looking good. So if half the economy, which is say agriculture, is not consuming, it's going to be very hard to see the economy really flourishing. The second change that has happened, particularly in the last month or so, is that the recapitalization of PSU banks, which have been undertaken in late October, now after the new RBI guidelines, the capital requirements in the banks will go up substantially. And so the growth capital that people expected would be available to them would be no longer available. And particularly in the light of the scams that have happened as well, I think decision making can slow down, and that can also affect as a drag on growth. The final point on the fiscal side, there is the government's intention generally in a pre-election year is to stimulate the economy in a big way. This did not happen in the union budget. The expenditure to GDP ratio continued to fall. We are seeing now the lowest numbers since 1980. But in some states, like say Rajasthan, Rajasthan government is hiring 1,10,000 people. They've given wage hikes to commodity workers. So those are typical pre-election steps that governments take. At the union level, I didn't see that kind of stimulus in the budget, which in a way is good because that leaves more fiscal room, or rather more room in financial savings to stimulate the private economy.
Vidya, is there too much of attention or the government's time and money is going only addressing the supply side of the issue? So we are talking about bank recapitalization, NPA resolution, and this overall easing of business, that kind of this for you to set up shop. But what is it going to really spur demand and growth? Because we are already seeing credit growth, which is likely to be the case.
Let me just take one step back to address that question. I have no doubt in my mind that this government has been really reformist over the last 5 years or 4 years. Let me give you 2 or 3 instances to support that point. Right from the beginning, when they linked fuel prices with the market prices. Now, this was theoretically the correct decision, should have been done maybe a decade ago, but 2 decades ago. But for some reason, India was running some huge fiscal deficits on this front. We were buying oil, putting oil at the price and selling half the price in India. So that is one significant reform. The second is, making sure that direct benefit transfer makes the Aadhaar process goes on. So when you think of some of these macro level reforms the government has done, they have done some good work, which is why the fiscal deficit under control is not an accident. I think they have done a series of steps to make it happen. Now let's come back to this specific question about demand creation. Now, our sense is that the credit growth for the last 3 years got quite jammed actually, from growth rate of about 16% or so, or 50% growing in the early 2010s. That suddenly come down to 5% or 4%. That had a lot to do with the fact that there was a lot of NPA in the system, and banks got stuck with that and focused all the energies there, and borrowers could borrow because they had excess capacity, and the whole system, what we call it traditionally, all the bill balance sheet problem got stuck the situation, and things got rolled up. Things got stuck. Now, that was there. But as we speak, I am frankly very bullish about the extent of demand that will come up in the next 3 years.